Today marks the beginning of earnings season, and as usual, Alcoa kicks things off. Now, I always say that Alcoa is one of the few can't-miss quarterly conference calls because this aluminum company gives you such a great read on so many different industries, from automobiles, aerospace, gas turbines, soda cans, trucks. But at the moment, there's another big story going on with Alcoa, and that's a pending breakup, where the company plans to split itself into two separate entities, one being a commodity metals play, and the other being a high value-added maker of engineered products for lightweighting. That's going to be called Arconic. I've said all along I'm a fan of the engineered products business, but if the U.S. government slaps a gigantic import duty on Chinese aluminum, like they recently did with Chinese steel, then the commodity metals part of Alcoa could start to get pretty intriguing, too. Now, Alcoa just reported a quarter where they earned 7 cents per share, excluding special items, represents a 5-cent beat. But their revenues came in lighter than expected, down 15% year over year, thanks to weak aluminum prices, and they also had a hiccup in aerospace earnings. So let's take a closer look at Klaus Kleinfeld, the chairman and CEO of Alcoa, to learn more about the quarter and how the breakup is progressing. Mr. Kleinfeld, welcome back to Mad Money.
Hello, Jim. Hi, good to see you.
Klaus, can we get any certainty besides second half about when this breakup will occur? Because we've got a lot of people who are very excited about the two different pieces, but they don't know whether to plunge in now or wait until the next quarter before they have certainty.
Well, all I can tell you, it's the second half of next year, and we'll work as hard as we can to do it. The sooner, the better. So it's the second half, of this year. That's when the separation is going to happen. Unfortunately, you're also dependent on some external factors. So not everything is in your own hands, and you also should keep in mind it's a 120-year-old company. So you can imagine how many things there are that need to be sorted out.
Now, when I look at the actual higher engineered business, I see some terrific things. Auto looks great. Aero looks great. And then I dig down into Aero, and I see that part of Aero, RTI, is fantastic. And then Firth Rixson, which, frankly, I was sold on, thinking that it was going to be better than expected, a big miss. Do you think by the time Alcoa splits, you'll be able to correct the big miss at Firth Rixson?
We are very clear. I mean, we are behind, and we will not be able to correct it all. We are already improving the performance. At the same time, what we're seeing in Firth Rixson is a market correction, because some of the customer platforms are behind. Not all of that volume is lost, but it's behind. There's very little we can influence on that end. And then there's some operational stuff which we can influence, and we are doing it. Some of it takes a little longer. So it's very clear. I mean, we will not be making the number that we originally had intended for Firth Rixson for this year, but we are working on it and trying to get it up to the numbers that we said we will be. And as you see, we are making progress already compared to last year. We are putting an expectation out for the second quarter, and you will continuously see we are improving. And the good news is, on the other acquisition, RTI, we are well ahead of our plan, about a year ahead of what we had planned, and Tital is on plan. So that's all pretty good.
All right, let's speak about aluminum demand and what can happen. Obviously, if you want the upstream, you're making a bet on aluminum. Not that long ago, March 1, the U.S. government decided that enough already with Chinese dumping, and they put on a tariff that made it so the average steel stock doubled. The ITC, the Trade Commission, is looking right now into Chinese dumping. When they look into it, what are they going to find, Klaus, and what will that mean for demand if China is found to be a dumper?
Well, first thing is demand still continues to grow. We expect demand for aluminum to grow by 5% this year. By the way, the supply, we believe, is only going to grow by 2%. So you see that the balance is going in the right direction. It's going into a deficit direction, which is good. It's very hard to project what the investigation is going to come out with. These are longer processes. At the same time, for us, the most important thing is that we have a level playing field and that there's fair competition.
But there's obviously it's not fair competition. Let's just call a spade a spade. I read what you guys think. I mean, it frankly is just a big works progress administration plan for China, and they don't really care about it. We have very few smelters left in this country because of China.
Yeah. Well, look, I mean, I'm glad that the investigation has been started. Let's have the facts speak and not speculate about it. And I'm pretty sure that there will be conversations from government to government. And at the same time, when you talk to the government official in China, they recognize the problem. And you can even see it built into their 5-year plans. I mean, they're talking about reducing the overcapacity, and it's happening, but it's not happening fast enough.
Okay, speaking of happening fast enough, you do have a rather noisy activist shareholder among you and Elliott. Are they happy with the progress of what you're offering? I mean, I know they can't know the numbers ahead because the numbers are secret, but have they been encouraging the way that things are supposed to be breaking up, or do they want a different pace or different units to be in different parts of the company?
Well, Jim, you really have to ask them, about what they are thinking about the quarter. The dialogue that we are having, that I personally are having with them, has been constructive. As you know, we've put 3 new directors on our board. We've been looking to staff the 2 new boards that are coming up anyway, and the profile of the new directors fits very, very well. And I think there's a good value add here.
All right, how are you feeling about the world? You got aerospace, you have auto, you have construction, you have packaging. I mean, you're really, obviously, the whole panoply of the world economy. Where are you? Because it looks like that some of these are doing better than expected. There's a pause in aero. I understand that because of a turnover. But if I look at this thing in total, I think that there's more happening that's better than the last time I saw you.
Oh, I wouldn't say that. I would say it's not as bad as we sometimes think it is when we were particularly listening as the first couple of weeks in January, right? I mean, the numbers in the end point down a little bit. I mean, when you look at aero, you mentioned already, very substantially down North America, heavy trucks and trailer, and automotive stable in North America, doing well. Europe is a little weaker than we thought originally it would be, but still growing in the right direction. In the end, I personally believe, I mean, that a sentiment has an impact on the investment profile. And if we talk about things that are headwinds, then in the end, in every boardroom, people are saying, hey, let's rather hold back with the investment and slow it down a little bit. And I think that's what we see reflected. As you know, sentiments has come back. So I think it's not, I mean, it has the potential not to be a bad year, but sentiment plays a role also in reality.
All right, I just want to go back to Firth Brixton for a second, and not because I'm not trying to pick on anything bad, but I've known you for a long time, Klaus. You do not tolerate underperformance. And this looks like genuine underperformance to me. Will you go over there and explain to them the way Alcoa works under Klaus Kleinfeld?
Jim, you should assume I've done that already. I've done that more than once. At the same time, you have to actually be clear in what can they control themselves and what can they not control. They cannot control the market headwinds. If there is a platform that gets moved out, we have the components on the platform, but if the platform gets moved out, they will get it in the end, but they won't get it in this year. So that they can influence. The equipment stability is one thing that they can influence, and frankly, I mean, the press outage that we had surprising us end of last year, this is all resolved. Isothermal, we are moving in the right direction. The most important thing here, Jim, is that I think operationally the improvement is there. The Alcoa business system is established. We have new targets. And then you have to ask yourself, how do I have to think about this acquisition? Think about you wouldn't have that acquisition. You literally would have a very partial offering to the jet engine customers. We now have a totally complete suite of all jet engine components. 90+% of all jet engine components can be made by Alcoa. This puts us on an entirely different level in the discussions with our jet engine customers and as well as with the industrial gas turbine customers. And you've seen, I mean, we've announced this quarter the biggest IGT deal, the biggest industrial gas turbine deal ever in our history of $1 billion. All of these things play into it. I think that strategically this is a very, very important cornerstone for our aerospace business. It will take a little longer, but we'll get there.
All right, excellent. Klaus Kleinfeld, Chairman and CEO of Alcoa. Thank you so much for coming on Mad Money. Okay, we don't know when the split's going to occur. Obviously, you'd be in it for the split because that's where the value creation is going to come from. Klaus Kleinfeld, Chairman and CEO of Alcoa. Mad Money's back in. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.